Okay, so it is Friday and it is the last Friday of July 2022. And we've had some big news this week just with the Fed fund rate. And so today I want to talk about two one-to-many strategies that you can all do to go out and get more agent partners or dominate and gain more market share. And then number two, how to re-engage with your past database or anyone who was pre-qualified or pre-approved earlier in the year that you know didn't buy. And remember, this could also be with new agents that you're meeting with. Add those people that they know who didn't buy. Maybe they decided to put things on hold because inventory was so tight and they just got so frustrated with their offers losing out that this very strategy that I'm going to show you today could also be used to market to them. The first one, how you would frame this when you're going after your database or for the client is I would title how to re-enter this market. And we're going to show them how you help solve the home affordability challenge, where a lot of people could be skeptical at the fact that, yeah, but at the home price point that I was looking at the beginning of the year was because interest rates were so low that I could qualify for much more of a home. And even though it was tougher to compete, my payment was much lower because of interest rate. We're going to show you that strategy. And then for the buyer's agents, how I want you to frame this one is this is how we help increase your client's purchase power, or the really sexy one is this is how we help make you more money. We help you net more in commissions by using the exact same strategy. So I'm going to show you this. Make sure you follow all the way to the end. If you have questions, please put your questions in the comments and we will be happy to address them. For those of you who haven't seen this presentation view, this is called Lender Launchpad. I highly recommend that you schedule a demo with Scott Nicholson, but you can see that he has titled this How to Re-Enter the Housing Market with a Conforming Loan. Now, full disclosure, he lives in California, so when you look at this, it's going to be a high price point, but you can see with just a click of a URL or this website here, you could text this domain. And when you text it, it looks super modern, super high tech. It's easy to follow because it's a thumbnail that goes into your text thread that you can just click and you'll see a very similar view. But just from a branding standpoint, you can see it's very easy to get in touch with you if someone wanted to schedule a call, if they immediately are like, yes, I love this strategy. I want to apply right now. It's super easy for them to do. You also have some social proof or credibility, which we have. I went to a conference last week and they had stated that testimonials or reviews, especially when you put them on social, that carries the most amount of weight to the types of professions that require the most amount of trust. So lawyers, doctors, and anyone in financial services. So I thought that was very interesting. And if you work with experience.com, then this auto fills into your review section. Just a small little note that they said when people are looking on social and looking for these kind of reviews, that your number of followers don't matter at all. When you send this presentation, again, it has a great video in the beginning. You have your TCA, which you can choose whichever TCA that you've created to link in that placeholder. And then again, it's just some framing of how you want to present this strategy. The first one, and I'll dive in, it's going to open up and you're going to see the wonderful mortgage coach TCA. I'm going to turn Scott off. Sorry, Scott. Okay, so again, great branding here at the top. And you'll see this is what it would look like if client, you re-enter the market today. And let's just say that you hadn't heard of me and you're working with average loan officer down the street. Again, this is not how we would approach it because we are modern mortgage advisors, but this is what the average LO would say. Okay, today you qualify for the $900,000 home. The par rate for today is 6.25%, which is going to give you a monthly payment of $5,500. Well, when you partner with us or when you use a loan officer who thinks outside the box, here's what we do instead. Side note here, guys, you're going to want to make sure that when you're helping people structure the offer, ask that listing agent or even buyer's agent, how is the health of the market? Like, is the value there for the home? If it is, I'm showing this purchase price where we're going above, because this is how we help you win the offer, is we're going to go above list price. And don't worry, the reason why we're doing this is because we want the seller to net the same. We're going $30,000 above because we're asking for a $30,000 seller buy down. And that's where the seller is buying down the interest rate for the buyer. So look what that does. We get a lower interest rate, which gives us a much more affordable home at only $5,000 a month, which would make someone feel a lot more comfortable re-entering the market. Again, kind of sell the fact that inventory is higher than it's been. So this is a great time where buyers are getting more options. And this is also when sellers are willing to, accept offers in this situation where they would buy down your rate. Now, let's just say, and it's not going to be in this example, but we have plenty of them where let's say that the value wasn't there. And so you have to show your next column of an appraisal gap. This still works with an appraisal gap, and they may have to bring just a little bit more, like maybe 5,000 more out of pocket to closing, but this can still work even if the value doesn't get there. Okay. So just wanted to show you for perspective, this is why you would work with us. What does your savings look like over time? Well, this is going to give you $46,000 over 5 years. We're just taking it 5 years, but what does this do in your interest paid? Overall interest paid over 15 years. Look, it's much less when you can have the seller buy down your rate for you. Here's the third column. You could show your database this. If you want to do a room full of buyers agents and make this a mastermind where they can ask questions, because sometimes this takes a couple of examples for people to finally get it to click. So again, you could do this as a social media post, a one-to-many mass email. If you had Lender Launchpad allows you to post it automatically to your social channels. But this is where it gets really sexy for buyers agents. Let's just say that the buyer that we're working with, their max DTI, their monthly payment, they can't go higher than $5,500 a month. That is their max. Tell me, how much of a home can my client shop for? The average lender will give them a pre-approval letter and say $900,000. That's what it's going to take to get the $5,500 a month payment. So here's how we help you make more money. We can actually show them at a purchase price of $1,050,000. So that's $150,000 more of a purchasing power because we're asking for the seller to, again, buy down the interest rate. So this is the equivalence. You can see at this price point with this rate that we bought down from the seller, we still get that $5,500 DTI ratio that we need and what the borrower feels comfortable paying. But now look at how much we've increased their purchase power. Do you think there's going to be a big difference when you go to filter in a search or when a client is searching for homes for above $1 million versus below $1 million? Yes, this is a win-win for your database, but it's also a big win for your buyer's agents who need all the help that they can get when it comes to earning more money. I hope this is helpful. Again, go ahead, execute right away. This is a TCA that you could recreate on your own. You could make it as easy as sending a link, whether you're using Lender Launchpad or not, but this is definitely a strategy that you're going to want to go to market on. Re-engage with that database, let them enter the market, let them know where interest rates are at, but this is how you can still help them look for a similar price point of what they were used to earlier in the year, even if interest rates are higher. So if you found value, please like it, share it, send it to your branch managers, your C-suite. We want to get this out to as many advisors who want to up their game, especially as we go into the fall. This is a great time to sharpen those skills and study some financial literacy practices. Make sure you've subscribed and you're watching these Friday videos that go out every Friday. And again, if you need anything, just let me know. Y'all take care.